Good afternoon, everybody, and I feel as if I've actually missed out. I hear this morning was a hugely interactive session, and obviously you had my colleague Ole Schmitz, one of the shadows on MiFID, here already, so I hope I'm not going to duplicate work that he has done, because I'm going to try and concentrate my comments very much more on the derivatives component of this, which is this afternoon's session, and particularly with regards to where we need to go now with regards to the G20 mandate that we have. Some of you will know and have heard me speak on EMIR over the last probably 2 years now. It's taken us 2 years in the Parliament of working to get EMIR to the final leg, and we're not there yet. We have not finished trialogue, but we are fairly close, I hope, to actually getting a discussion concluded with some proposals coming out from the Parliament and coming out of trialogue in the next week or so. We do believe that in G20, the commitment for derivatives was an important one. Obviously, in EMIR, we've dealt with clearing and repositories, but we have the second part of the commitment from G20, which was to actually ensure that as much of the trading activity in derivative instruments was moved onto an electronic trading platform as appropriate. So that is a commitment that was made, and the European Parliament is taking these commitments extremely seriously. So within the draft proposals of MiFID, we obviously have some proposals as to how that can happen, and judging by the questionnaire responses that seem to be coming in to Markus Ferber's rapporteur's questionnaire that he put out, the OTF, as it's been defined, has generated a lot of interest. I think interest is the polite way of saying it. I think many of you have been a little more robust than that and have suggested that maybe it needs a little more work than it currently has undergone. But the motivation for all of this, of course, is increased transparency and a reduction in risk, and therefore safer markets. And the ability to monitor that systemic risk by the regulators and also by market participants themselves has been critical in setting this framework. And I do believe that when the MiFID draft documents came out, they were actually a very sound starting point and a very good place for the Parliament to now start their work. But we need to make sure that we've already dealt with transparency when we actually dealt with it under EMIR, in making sure that all trades are reported via trade repositories. And whether they're done on any particular venue, whether they're done in the OTC category, whether they're done by voice, electronically, any format, that actually they will be recorded in a trade repository. That will increase transparency, particularly for the regulators over time. So I don't think in this MiFID document we should get so hung up on the transparency component of this, given that EMIR has gone a long way to actually solving some of those transparency issues. But we also need to make sure, and the way that we did with EMIR, that not all products should be eligible for central clearing. There are some exceptions out there, and we need to make sure that when it comes to the trading of these instruments, we also take the same line. There are going to be certain instruments that are not suitable for going on to electronic venues, and we need to make sure that we are very flexible in our approach and are not too rigid, trying to cram things into models that maybe don't fit. So we also need to make sure that where the existing market infrastructure is working, we take that into account. I'm firmly of the opinion that if it's not fixed, not broken, we shouldn't go and fix it. So where we've actually got models that work, perhaps within the MTF field, we should actually recognize that they are working and allow them to continue to do so, and maybe look at how we might expand those categories further to actually incorporate some of the other derivative instruments. Now, the OTF category, I do believe, has actually asked more questions than delivered answers at this point in time. But we are at the start of the process, and we can shape what this actually means. But the reality is, the OTF is a category. It's a very broad category as defined. And therefore, we need to actually look at how we're going to manage and structure it to make it work for all the instruments that are out there. And there's a big question as to whether or not we're trying to fit too much into this category. Should this just be a derivatives platform, or can it incorporate fixed income? And can it indeed go even further and incorporate all of the broker crossing networks as well? And these are still big questions that certainly the Parliament are struggling with. And I think if any of you have heard the rapporteur speak, it's the one area of deep concern that he is expressing at this point in time. But there are other regimes out there, and we shouldn't forget that we already have some market solutions already in the derivative space and the fixed income space using the MTF model that has been in existence since MiFID I. So we also need to make sure that whatever we put in place is comparable and works in a global context. So we need to make sure that we don't have something that contradicts other global regions in terms of the instruments that they will be trading on electronic platforms. So we are very aware in the Parliament of third country issues, and if any of you had sat in trialogue over EMIR, you'd realise that over half of the discussions have been about the third country issues and how we make this work globally, making sure we don't disenfranchise European providers of service, but also making sure that other jurisdictions don't impinge upon our European providers of service either. So the extraterritoriality issues have been at the forefront of the agenda. But it's not just the US that we have issues with. There are global issues here that we have to put in place. And we need to make sure that if we actually want strict equivalence, we don't actually have bad reciprocity. So we need to make sure that everything is appropriate and proportionate, and that we recognise finance is global and is not a European issue. We need to make sure that what we give ESMA and the Commission to do in terms of rulemaking are very specific. They cannot have a very broad mandate. They need to be given guidance as to where they need to go. So in level 1, we will be setting a legislative framework for all of these things and making sure that when they set the rules is within that particular legislative framework. And for me, it's really important to realise that actually there really is an 80-20 rule here. If we capture 80% of the most risky products, the most highly traded products within these platforms that we're proposing, then we've probably done a really good job. For me, there is a need for bespoke products. I've spoken to enough companies out there over the past 2.5 years to realise that there are corporates out there who need bespoke products in order to reduce the risk in their businesses. And they are operating global businesses. They need to have tools that are bespoke for them to actually take out risk in their business models. I believe the financial services industry are more capable of absorbing some of that risk than the companies themselves. And so bespoke is not a bad word. Bespoke is actually sometimes the best option. So we need to be careful not to be too prescriptive. And I have to say, I'm going to end with a few comments on competition. Those of you who have heard me speak before on other topics will know that competition is dear to me. I do believe in competitive markets. I do believe we need to go back to the first principles of MiFID I, which was all about increasing competition in the market space, particularly obviously in MiFID I with regards to equities. But I don't want to take a step back when we start talking about derivatives, and I certainly don't want to be taking a backward step when it comes to talking about fixed income space and all of those. We need to create open models, accessible models, ones that can genuinely compete with each other. Stability and safety are new buzzwords. Post-financial crisis, we really do need stable systems. We need really well-managed, risk-managed systems out there. But I think we can get that in the context of competition. We don't need to have too prescriptive a framework right now. Investors also need safety, and I think we shouldn't forget within all of this that when investor groups are calling for greater protection, for more segregation of assets, then as market service providers, as platforms, we should be able to find a way in which we can actually accommodate their requirements for greater safety and protection of their assets. So I would actually say that I really do not want to see a watering down of the Commission's proposals on competition and on access. And I really do feel that the goal of the Parliament this time round with regards to MiFID II is going to be strong and resilient market infrastructure. But we shouldn't be afraid of a competitive landscape, because I genuinely believe that that is all about giving investors choice and serving your customers well. So for those of you who actually are in the market for providing service to your customers, this should be an opportunity to shape a strong legislative environment which will actually be an asset for you going forwards. MiFID I had a lot of good things within it and some things that need improving, but we need to make sure that we identify the good and build upon it. And those things that need working upon, the Parliament is very open to dialogue and to discussion, and we're there to actually try and shape this into legislation that works. So with your help, we'll hopefully be able to do that. I'm going to stop there and maybe take some questions.